Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is going to be reviewing the ECB and trading the Euro Fallout. We've got a whole bunch of markets lined up. We've got a trade update for you on that Ethereum. If you remember that Ethereum level, we hit that one pretty well. So I'm very happy today. We hit the Ethereum. We're going to look at the CAC 40 and the German 30. Interesting price action after the ECB spoke today. Also going to look at the Euro Great Britain Pound Euro CAD. Also, a pullback zone in the Euro USD, which looks pretty good to me. We got a 13-period EMA that's going to be right in the ball game here, probably in the next 24 hours that I like a lot, even though our Fibonacci retracement sort of got a little bit messed up. I'm going to walk you through that as well. And then also we've got the Trump getting ready to visit the Federal Reserve. The sparks are going to fly when he gets over there and takes a good look at what the heck's going on, and probably there's going to be a lot of tweets. We'll be watching social media close, and when Trump goes over there and has a look at the operation. And also Christine Lagarde had a few things to say. Not really much, but she had a few things to say. So good to see everybody back. Yes, sir. Always a pleasure. Yes, sir. Joshua Chung. Good to see you, Josh. Ahmed Reda. All right. I wish you had a lovely trading Tuesday to Thursday. Always do. Anytime I'm in front of the screens, I feel pretty good, win or lose, but we do much more winning than we do losing. But hey, listen, when you lose, you lose. Learn as much as you can from it. You're paying for information. It's your money. You're paying for information. Learn as much as you can from it. Team Marina, good to see you. Team Marina, always a pleasure. All right, a little bit of somber news to open up today's live stream. Hulk Hogan passed away. They just pronounced Hulk Hogan dead in the last hour. It seems like all the heroes of my childhood. We lost Ozzy Osbourne and Hulk Hogan in the same week, and I was a pretty, I wouldn't say a huge wrestling fan. We didn't get much wrestling. We only had like 2 channels out in rural Montana, so we didn't have all the pay-per-views, the cables, or all the wrestling that you have now. But over the years, I've always sort of watched wrestling, and Hogan was one of my favorites, going back to the Rocky III days when he was in the movie with Stallone. So rest in peace, Hulk Hogan. Big loss. Ozzy Osbourne earlier this week. I wasn't going to mention it, but it seems like they come in threes, so I don't know who the next big star to go is. But between Ozzy and Hulk, I mean, you didn't have 2 bigger stars in the 80s, that's for sure. So happy trails, guys. See you on the other side at some point. So Gordon Williams, good to see you, Gordon. Welcome. Always a pleasure. Absolutely, T. Always a pleasure to be here. Lita, good to see you, Lita. Welcome back. Ralph H., good to see you. Got a great message from a longtime viewer, longtime member of How to Trade. Said they were going to be on the road in Europe. So they were going to be watching us on YouTube, hopefully over the next few weeks. So a big shout out to Jeanette from Down Under. So thank you for the message earlier today. Always love to hear from the traders that have been around for a while and that are making a go out of this. I'm actually going to be in Europe here in a few months. I'm going to be over in Greece. Looking forward to it. I've never been. It's a long flight from Dillon, Montana, but I'm interested. I've never been. I'm interested. I want to see it. So let me see. Theo Cosby. Yeah, I forgot to mention that. Team Marina, Malcolm Jamal Warner. Theo from the Cosby Show had an unfortunate incident in Costa Rica. I've been to Costa Rica. I didn't go swimming, but he got caught in a rip current. That was sad, too, because I watched him growing up as well. I mean, it was a tough week for the 80s, guys. It was a tough week for the 80s. Let me see. Malcolm, yep, absolutely. Absolutely, Gordon. Yeah, that would be the 3, wouldn't it? So it would be Ozzy, Hulk Hogan, Malcolm Jamal Warner. Wow. It slipped my mind. Wow, that's the 3. That's the 3. So Goku, good to see you. Bilal, always a pleasure. Bilal, let's see. Malcolm, yeah, you guys are right. That's the big 3. Wow, man, that's creepy, isn't it? They always say it comes in 3s. Quick story, and then we'll get to the trading. My wife works in a hospital. She's an FSD, food service director, and it's funny. People think of hospital food. Well, it's sort of gone to boutique now, and they're really trying to serve high-end things at these hospitals and do caterings. But she said it always comes in 3s. So when they would be servicing the floors, the ICUs and things, she said a lot of times one person would pass and 2 more would pass in quick succession. It always comes in 3s. So I can't believe that. That's incredibly difficult to believe, but you guys are right. It happened 3s. That's the 3. That's creepy stuff. All right, enough creepy stuff. Let's get right down to business. Welcome to the Switch Markets community. We're on the How to Trade and Switch Markets. We're still melding this thing. We're bringing this synergy together, trying to grab the education from How to Trade and the market access of Switch. So we're trying to make this thing into one big party, one big strong community. And I think we're getting there. We hear a lot from a lot of folks. And it's good to hear from people all over the world, and they're interested. So I think we got something here. Lewis Shepard, good to see you, Lewis. Let's see. So right here, trade update. I want to start out with some good news. We just talked about the big stars going down, but the good news, Ethereum. Let's get right out to Ethereum. This is a pretty good trade update. We had pretty good buys here, right around 35.07. Now, this would depend on who your broker was. But this is one of those where I really, if we had 35.0750s as a buy, and the low, at least here on this Coinbase, went to 35.0778, which is 23 cents. You've got to get that trade. I mean, you have to get that. Probably depends on which exchange you're with or which broker you're with. But this this Ethereum USD is exactly what we were talking about. Exactly what we were talking about. We came right down. We hit 38%, 3,500, and you're going to see a nice big move back up to the bull, which is already up to 37.07. So that was a relatively easy clean. I mean, if you got that one, you got to feel pretty good about it. But nice retracement back to 38%. That tells us a couple things about crypto. Number one, we're bullish. We want to be bullish, and we're bullish. And number two, don't be caught a seller. You don't want to be a net seller. You don't want to be net short right now. Crypto, there's going to have to be a big-time game changer that comes around that's going to sort of flip the chessboard over and send prices lower. So definitely be careful if you're shorting anything to do with crypto. It was a little bit rockier, more of a rocky road here with Dogecoin, though. We had sort of some Dogecoin levels set up. We had a 38% set up from 25. Didn't really work real well. You saw we had a bit of a stutter step here. I can show you on intraday charts, but you didn't get the bounce that you got off of 62%. Now remember the rules with Fibonacci's. If you're above 38%, that bullish trend is strong. If you're above 62%, that bullish trend is still intact. Still intact. So you're still very bullish here on Dogecoin. What is the difference between Dogecoin and Ethereum? Why is that move so much bigger than the one that we saw on Ethereum? Elon Musk. Musk's association with Dogecoin. We had a bad earnings miss yesterday out of Tesla, and there's a lot, or not necessarily a bit of retail. There was a lot of questions in a 9% downturn in Tesla stock today, and a lot of that spills over into these crypto that are sort of associated, or at least not necessarily pinned to Elon Musk, but definitely when you think of Dogecoin, you think of Musk. And that's exactly what the market drag is here. And you'll notice that in Shiba Inu, one of my favorites, Shiba, you can see the big pullback in Shiba, mirrored that at Doge. Why? Elon Musk. Understand market drivers. When it comes to crypto, it's hard. I'm not going to sit here and lie to you. It is very difficult to understand what makes crypto go. Regulation's big. Institutional adoption's big. All right, Tuesday, Wednesday, Thursday, psychology. It's all systems go. Remember, our primary objective is to hit our weekly P&L. We want to aggressively trade our plan. If it says trade it, trade it. If that Ethereum trade comes your way and our game plan says trade it, trade it. We don't miss. Tuesday through Thursday, it's an old hunting analogy. My safety's off and I'm ready to go hunting, fishing. Our line's in the water and we're fishing. We're ready to go. And what we've got to do here is ride the momentum, really work on good execution, execute our plans, and stack up the green pips. We're thinking very positive Tuesday through Thursday because we're aggressive. We're aggressive. That's the old saying, we want to go out on our shield. That's what you do Tuesday through Thursday. That now's the time to take the risk. It really is. Monday, not so much. Friday, maybe not so much if we don't have a news event. The last 72 hours, not quite 72 yet, but they've been pretty good. Not too shabby, better than last week. Week 30, you can see right here, existing home sales, EIA, was the news yesterday. Today's the ECB interest rate decision. Now, a lot going on here with the ECB. We wondered what they were going to do with their interest rates. Pretty much the whole market knew what to expect, and it was relatively straightforward. News of the day, deposit facility rate, marginal lending facility, and the ECB interest rate decision, 2.15. They're all unchanged. We could go through, try to break down what each one of those lending rates are. I go with the last one, 2.15. That's sort of the prime rate. Deposits, probably what the overnight bank rate is. And marginal lending facility, that's probably something that's awfully European that I don't understand. No, listen, a couple of those rates are just how banks lend money to each other. We don't have to worry about that. The prime rate's really the big one that you want to see, and that's 2.15. Somewhere down in there. Bottom line is, everybody held them firm. Everybody on their committee said, we're going to go ahead and hold things firm for now. And we'll get into Lagarde here in just a second and what she said. So here's your MT5 platform, Euro USD. Sort of what I put out earlier today. Our Fibonacci's got a little bit messed up because we did push a little bit higher than the ones that I gave you. But I want to show you really the couple of important aspects of this trade. First one, you can see right here, this is sort of the 920 crossover we talked about. There was your crossover way back, when was that? June, middle of May. Middle of May really was when the uptrend began here. We thought we might get a cross under a few days ago. We haven't. We got another leg up. We're still very bullish here for the Euro USD. That 38% zone is one that I really liked, and I liked it for a couple of reasons. Number one, it was right around 117 even. And when we get Fibonacci's that sort of line up with even levels, that's what I like. That's multiple. That's an area of natural support plus a Fibonacci plus good market structure. And we had one more ingredient to this trade that I really liked that we're sort of going to hang our hat on. And what that's going to be is it's going to be our 13-day EMA. I'm a big fan of the 13-day EMA. Now you'll notice this high is going to be different than the one in the trade idea that I put out earlier today. And the reason why is right after I put it out, it pushed a little bit higher as Christine Lagarde was addressing the media. And now you got the big reversal. It's 38% down there at 116.99. But I'm more interested in my moving average right now, 116.92. We're going to buy right above 117s. I think any reason really to join this uptrend is a pretty darn good one. So I want to be more aggressive as opposed to passive. Right now we're trading about 117.65, and you're going to come back down to about 117-ish. I mean, I think that that's a pretty good trade. I would be watching that relatively closely. That's for sure. That's absolutely for sure. So I like that trade a lot. I think this one's going to come into play for us and be pretty good. Same basic premise is the Ethereum trade. We're playing 38% and we're doing it aggressively, but I also love the convergence of that 13-period EMA. That's a big one. That's a big one for me. So let's see. Got way behind on the live chat here. Let me see. T. Marina. Wow. Great question. Sogoku. Will the Thailand-Cambodia escalation rattle the markets? It could. I saw the Thai baht, the currency there, went on a massive rally here in the last, I believe it was 24 hours. Will it rattle the markets? Globally, I don't think so just yet. But given our geopolitical situation, any escalation in anywhere, really anywhere, and in Southeast Asia, the United States has a long history of being in Southeast Asia, going back to the Vietnam War back in the 70s, late 60s or mid 60s to early 70s. But I think that it's very possible. I'm watching it closely. Sengoku, good question, and way to be on the ball, watching the news. What markets could it rattle? Any kind of conflict's going to send things to safe havens. So we'd be watching Swiss francs. We would be watching Swiss francs and gold, and also silver. All right, let's see what we got going here. Can we check the XRP USD again? Absolutely, T. Marina. You know what? This is a good time to do it right now. Let's go ahead and just pull up. Let's go ahead and pull up that XRP chart because it's a good one. This was definitely an interesting. I won't say an interesting scalping thing. I mean, a lot of people love scalping crypto. You see a million YouTube videos on scalping crypto. I don't know about that. I like position trading it more than anything just because you can buy it on cash markets, and something like Ripple isn't really expensive. So you can take a decent position and actually own a bunch of XRP. This spike high right here is one we were really highlighting not too long ago. You're about 33. Let's see, 377. Excuse me with the decimals. I mean, that's confusing to me. 340, something like that. So you sort of came off of that top, but you did extend. As far as the first thing that I would be looking at, just to sort of get this going in the right direction here, so I stop stuttering and talking in circles, is right there. Let's get right there to our key levels. What's our key level? Probably 350, 3.5. That's going to be a key. And then also 4 is going to be a key. Now, we're still very bullish here. Let's go ahead and take this down and take a look at our Fibonacci's. That's going to be a weekly chart. Let's go ahead and do a daily. All right, this was a P formation. We talked about the P formation and then the big break. And you can see right there, that's the big break. Big break. Bang, bang. You went down to 62%. 78% was finally where you stopped. That's really hard. That's a hard trade to get because you sort of had to like 38% given how slow the market was around 30 or 35 even. 350. So you're really, really compressed. That's your key level. And then there's your big break. Volume ticked up and we washed it out. We talked a lot about, what's going to happen to retail crypto traders that are trying to buy in, trying to get in at the top. And what sort of our whole premise and our whole thesis is that if you don't have good trade location in crypto from the levels that it's at, this kind of stuff right here will destroy you. It really will. And it's not that you're wrong. It's not that you're wrong by wanting to buy 38% or wanting to buy, at 35 or 350 even. There's nothing wrong with that. You're probably right. I mean, I would be absolutely shocked. I won't be appalled, but I'll be shocked a little bit if, in fact, we don't go test 4. I mean, we're going to test 4, aren't we? We came this far. We probably should go up and test 4, but how do we get there? That's the problem. So if you're looking at a daily chart, you're saying, okay, well, the perfect entry was 78%. Yeah, but I mean, who knows that, after the fact, this is easy. Could you have game planned for 38, 62, and 78? I mean, if you're playing cash, if you're going on the cash markets, XRP, it's something that stock traders do all the time. They dollar cost average in because the odds of picking the exact bottom of this are nil. So what you would do is you would just buy some there, buy some there, and buy some there. And that dollar cost averages you into a better price. I don't have a problem with that on the cash markets, but in derivatives, it's a disaster. And the reason why is the leverage. So let's say right here you bought some and then you bought some more and you're down here, you're getting just destroyed. This position's way underwater and you probably spent the last of your money there. And even though you bounce back, you're probably just right around break even, depending on where your price averaged out to be. This is more of an investment play to the top side. So dollar cost averaging, a lot of people frown on it. They don't like it. For stocks, it pretty much is. I mean, if you love it at 350, you got to love it at 3, right? All right, let's go with some more clear-cut. Let's go with some more clear-cut technicals here. I mean, there it is on a weekly. There it is. Spike low right there, negative week, 16th of June, week of 16th of June. There's your high, the 14th of July. There's your pullback, 38%, right around 3. It doesn't get any better than that. So you had a daily 78% right around 3. You had the big round number of 3, and then 38% on your weekly. I mean, my compliments to the chef. That's a banger. Whether or not you got that, I don't know. You got to really start thinking ahead if you're going to play these Fibonacci's. You got to be able to be ready for it. You have to know what you need to know before you need to know it. That's for sure. That's what you got to do. We're going to talk a little bit about this chart in a minute and what it means. This right here, though, is what I wanted to go ahead and cover, and it was Christine Lagarde. Would they already pull it off? Yeah, it looks like they've already sort of pulled this one down. Lagarde didn't say much today after the interest rates. Essentially, I'm going to give it to you in a nutshell right here. You've got 2%. They said that the ECB and Christine Lagarde said that the inflation in the Eurozone was right around 2%. Which is exactly what they want for the intermediate term. That's pretty much the global standard, 2%. And then she also said economic growth for Q1 came in a little bit better than expected. But what's the problem? They don't know what's going to happen with tariffs, and they don't know what's going to happen with trade. So if, in fact, those concerns do end up ruling the day, they may have to make an interest. They may have to make an interest move sooner rather than later. God, say that 3 times fast. So the big thing to take away from the ECB today is, number one, they're going to be data dependent. She said that. They all say that. So we're going to wait for the data to come in. That's a complete passing of the buck. Number two, they said inflation's come down to right around their 2% goal. I don't know that it has. That could be a bit of a fabrication. Also, Q1 economic growth was better than expected, so they were happy about that. But the last thing, and it's always a caveat, is, well, the tariffs. We just don't know about the tariffs and the trade uncertainty. Okay, so what? Basically, it was a big nothing burger. Nothing really happened. We saw some pullbacks here. I'm in the German 30, just to sort of cover these. This is our 920 EMA crossover strategy. You had a buy signal back on the 27th of July, and today you're off about 1%. Why would you be off 1%? Is the market really looking for rate cuts every single time out of these central banks? What happens in the United States when we don't get the rate cut coming in September that we're supposed to get? Then what? Correction. So this pullback right here, I'm in the German 30, sort of indicative of what exactly the traders were thinking with regards to monetary policy. I think they wanted more rate cuts. They wanted more rate cuts. I mean, they're down about 1% today. It's not the move of the century, but still, it suggests market sentiment's a bit negative. CAC 40 is the same. This is one of the big ones out of France. You can see something like that, off about 0.5%. Both of these got buy signals back somewhere a few weeks back. This one was on July 7th. Pretty good little rally, but the pullback, was it really that good today? About 0.5% off, and that has to do with monetary policy, 100%. So you want to be careful when you're trading these things, especially during a period of monetary policy adjustments from the ECB. Always be aware of your economic calendar. That's a big one, that ECB release. Shook things up a little bit as far as the euro goes. The euro, Great Britain pound, this is probably the one that we want to look at here. What could we say, if we want to trade this? Is it a bullish trend? On lower time frames, it's going to show you that it's bullish, and that's great. I have no problem with that. I always love my macro trends because there's always a level out there that nobody's looking at or nobody's aware of. What could it be? That right there is a big time zone. This high, this Euro Great Britain pound, the high right there back in April, your high right up there is about 87.38. So right now you're driving above 87. Be on the lookout for a little bit of resistance here. I think folks are going to be taking profits in that area. Why would they be taking profits in that area? It's a key level. It's a key level. It's a yearly high that's been established for about the last 60, 70, 80 days, something like that. It's a big deal. So we want to be very, very careful with what we do around that swing high. If we break above it, then we're going to look to scale in on low time frames to the long. If we sort of stagnate in that area, then potentially it may be an opportunity to take a short, a little bit of a short-term short. I mean, you really could. You could step up and sell, maybe a quarters, maybe 87 and a quarter you could do, or wait for maybe 87.30, something like that. And then to test, look to get that rebound. Last thing I'm going to say about that upper Bollinger Band is that upper Bolly is right around, 87.21. I'd probably be leaning towards selling 87 and a quarters here if you get an opportunity to. Why? You're fighting a trend, right? Well, I mean, on the monthly, it's not really a trend. On the weekly, sure. It's a grinder. That's what I call a grinder. It's not really a breakaway trend, but it's definitely you're grinding higher at this juncture. Let's go ahead and take a look at the dailies. Maybe we can get a nice long scalp, and we can't. We can. I mean, this is just absolutely just ugly. That's an ugly type of a chart. A lot of overlap between the candle bodies, a lot of spike highs and spike lows. We're just moving sideways there. 86.50 clearly was big. Now 87 is big as well. I'd probably be a net seller right up here. Potentially to the short for 25 or 30 pips. I wouldn't go for much more than that just because the pressure is higher. On an intraday, what do you want to do? Well, I mean, you can see that the bulk of this move was in the last 4 hours. Why? ECB. ECB does everything, right? Spike low, spike high, same bar essentially, just the last 4 hours. Pull back bid right there at 86.93. Boy, I would pass on that. It's too tight in there for me. I would wait for this market to get extended and test yearly highs. If, in fact, you're going to see a failure, it's probably going to be from up there. So I would be watching that one relatively closely. Okay, let's see. We got a couple more questions here, and we got a few more markets that we need to look at, that's for sure. Doge is a meme coin, yep. Ether is way more respecting. Yeah, Ethereum's it's silver. Bitcoin's gold, Ethereum's silver. Let's see. Shane, do you expect Tuesday to Thursday also work for crypto? Ahmed, if you're trading crypto, you could probably trade at any time. Crypto's different. Crypto doesn't abide by the economic calendar. Crypto goes more on your basic news cycle. And what I mean is regulatory announcements. That's the big one. Institutional participation. When it comes out that XYZ Bank is going to start being a custodian of crypto, then that's going to boost prices because that's institutional adoption. Typically, we see those announcements during the week, but the regulatory stuff oftentimes comes on the weekend. So I think you could probably trade crypto 7 days a week. I wouldn't shy away from it. As far as when volume is actually in the market, is it like a U.S. Open? Not really. It typically all depends on news cycle. So if you're going to be a crypto trader, you need to be sophisticated and probably pay attention to that news because you never know. Let me see, Sagoka, when the August 1st tariffs hit the euro hard, though, I caution on the euro USD. Yeah, I mean, I'm not too much worried about the August 1st tariffs. We know they're coming. They could easily be lifted. They're negotiating right now. Trump is. The Trump team and the EU, they're all negotiating. There's a lot in that negotiation, too. They're talking Russia, Ukraine. They're talking military aid to Ukraine. They're talking all sorts of different things. So I don't really know what to expect out of that. I think the markets do, though. The tariff thing's over, I think. We saw the panic back in April. That's over with. Now we're just extending just another date on the calendar. That's for sure. Man, I got way behind on this chat. Sorry, guys. Also, is there a Discord or a private channel we could communicate with you? Yeah, Ahmed, if you want to communicate directly with me, go to howtotrade.com. Go in there, register for your free account, click on my picture, send me a message, and you can private message me, and I will get back to you in short order. I answer pretty much everything on the same day unless I'm out of the office. That's for sure. $3 of support. Yep, $3 is huge. Let's see. Altcoins react. Man, I got way behind. Let me see. T Marina, can we look at the Euro Swissy and or the Euro Yen? Yeah, we'll go ahead and look at that. I had the Euro Yen sort of dialed up just a minute ago. I didn't really see much that I liked. The trend line was sort of tricky in that one. Wasn't real great. But we can certainly look at that. Let me see. Sogoku, Japan Prime Minister is due for a change after losing. Euro could gain versus the Japanese yen. Yeah, good one. Absolutely. Euro yen broke out high after breaking trend line there. Yeah. It did. I mean, the trend line we had to the bear didn't work. 172 mark. Okay, here we go. Let's go ahead and take a look at the euro, Japanese yen. 4-hour chart. Love it. I love the structure. I can tell you that right away. Swing low right there, swing high. Pull back right there, 172.50-ish, something like that. That could be very good. That could be very good. So you sort of have to be ready for it. 172.50. I like that as a scalp potentially. On our longer time frames, what do we have? I mean, we can draw these Fibonacci's. These are pie in the sky Fibbies. That's what I say. You're not going to get this anytime soon, but a great level. That's a beautiful market structure right around 62%, or excuse me, 38% plus 13-period EMA is coming right into that zone. That would be that would make for a very happy day of trading, but I wouldn't even waste my time looking at that right now. Let's go down to a daily. Yeah, daily's tough. We talked a lot about this moving average right here, 13-day moving average. I have a lot of respect for it. And you can see doji sort of came down, doji, and now you're starting to extend to the top side. What can we really say about it? Definitely bullish. No question about it that we're bullish. The real thing that we want to know, or the real question that we want to know, is how high do we go? Well, in a trending market, typically, that's the most difficult question there is, and that's why we always look at our historical maps. I mean, it really is. Think of this as your roadmap to the market. You want to know where a market's traded and when it traded it. Right there, that's spike high. You've got to respect it. 175.42 right now. We're trading 172. So if you wanted to be long this market, you certainly could do that right up until that 175 zone. That's where I think there'll probably be a little bit of static, a little bit of two-way action that could be problematic in a lot of different ways. But definitely an interesting type of a trade. I think that for right this minute, I would be bullish. Go from that retracement level we just talked about, but up around 175, things are going to change. Why? It's going to be a historical high. You got to really respect those zones because everybody's going to have an opinion there. And if there's more sellers than buyers, price is going to go down. I know that sounds stupid, but think about it. That's what we're trying to do at any given price point. We're trying to figure out, is there going to be more buyers or sellers? Now, for me, I think right now you probably got a pretty good chance of having more buyers up to that key level. Now, once we hit that 175 threshold, and I know it's 175.39-ish or whatever, but 175 really is the area that's going to chop the wood there. So what's everybody going to think at 175? They're all going to have an opinion. And if more folks want to sell and keep a lid on the market, then we get that little pullback that a lot of folks really love. And I'm one of them. I love those little pullbacks. Those are great. They're low risk. If you get stopped out, you get stopped out. You don't have to worry about it. That's for sure. Doji's in abundance. Yeah, there's a lot of dojis on there, isn't it? Ripe for a correction on the euro yen, maybe even a double top if 175 doesn't break or hold. Yeah, I think you could easily see a long-term double top and then a sell-off here. It would really depend on a monthly chart. You hate to do cup with handles on monthly charts because you end up spending half your life waiting for the thing to set up, and you don't want to spend that much time on one trade. But interesting stuff there on the euro yen. Let's see. We had one other one we wanted to look at. Euro Swissy. All right, let's look at the Euro Swissy. All right. I can tell you right now, from a monthly perspective, I have zero interest in this. I don't mean that in a bad way. I'm not making fun of anybody's market. If you guys are trading the Euro Swissy and you're making money, then what you're doing is right. But that is about as tight as of a 2-month run. Doji. I mean, what are you going to do with this thing? What are you going to do with this market? I mean, you go spike high to spike low there, and you see we sort of fizzled out around 50%. I would probably just throw that Fibonacci in the garbage. Wouldn't even worry about it. I'd be looking probably at my 13-month EMA, which is up there at 94.25. So that's about 80 points up the way. Probably could sell 94s and be real aggressive with it. Am I bearish or bullish here? I mean, the long-term trend is clearly bearish. There's no question about it. I don't really believe there's any reason to step up and buy this thing. But always remember this on some of these currencies. I mean, Euro, Great Britain, pound's on the move now, but for years that thing would just chop sideways, and that's exactly what's happening with this Euro Swissy. So when I see a market like this, that really, I don't know that it gives you enough to trade intraday. I mean, with a monthly range that small, I don't really know. I can tell you that a triple bottom on a monthly is pretty good stuff. Your low right there is going to be 92.10. Your low right there is 92.04, and your low right there is 92.19. So 92 even. somewhere right around maybe 92.09, it's probably worth a shot to the long side. And the reason why is because you've got bidders down here. These are essentially liquidity sweeps. If you're a smart money trader, you got bang, bang, bang. That's fine and dandy. Do you get another one and then a bounce up? More than likely, yes. But here's the kicker. When that level breaks, and it will, eventually they all break. Once it breaks, then you're off to the races, and we're selling pullbacks all day long. So that area right there, right around 92, that's a big deal. I'll be watching that probably over the rest of it. If you wanted a short, if you wanted a good trade location on a short, that 13-month EMA is a pretty good one, 94.25. But that is tight. I mean, that is absolutely tight. I would be on the sidelines until this thing did something. I mean, if you're sitting, I mean, that has banks written all over it. Those are like credit default swaps or something where they're just swapping money back and forth, arbitraging the small banks out of existence. You guys probably don't get what I just said, but that's the big banks. You see a market that's not moving like this. I don't say rigged because that implies conspiracy, and I can't prove anything. And if we can't look at the numbers or the charts or anything, then I'm not even interested. But I will speculate a little bit and say that typically when you've got a market in balance like this, it means that you've got heavyweights slugging it out. And a lot of times, I don't know if you've ever watched a heavyweight fight, but the first few rounds, they don't necessarily try to win the fight. They're just putting on a show. That looks to me like somebody's putting on a show. Okay, you buy here, I'll sell here. Market's not going anywhere. Who do you think loses when the market doesn't do anything like that? We do. Retail does, because we're trying to get on the side of a move. And if we can't get a move, then it's impossible to get on the right side of it. It's a dirty game out there, guys. Euro Swissy, which central bank's trading against which? ECB against the Swiss National Bank? Could be. Who knows? I have no clue. I just know that market is not moving. I do know that. So I'd be looking to buy. If we get out of equilibrium, that'll sort of indicate that there is some pressure to one side or the other. We'll have a chance to buy there and sell there. But other than that, I'm not really too interested. That is way too tight for me. Those tight markets can really, really, really pound you. Let me see. T Marina, I want to attempt the 5813 EMA on the daily for this if it allows. I found success on the daily with others. It is very tight. I've been waiting for a break. Yeah, there's nothing wrong with waiting for a break. If you get on the right side of a break. So if you're going to go to the 5813 on the daily, let's go ahead and pull up. Let's open a layout, see what I can get going here. And we want Euro Swissy there. Daily. I like your idea on the daily because you're going to have a decent stop loss. Okay, I see what you're getting at here. So you've got compression, potentially the break right there. The crossover, okay, you're going to be above all three moving averages. The crossover looks to me like it developed right here. So, yeah, probably on today's close, that would be a bid. Where's your stop loss going to be? Couple of options. That's a pretty good stop down there, right beneath 93 even. That gets you into a relatively cheap trade. I don't think I would play it that tight. You could almost scalp this thing. I mean, you could just go right there to 93, 15 or something, 93.19, and play that to the long. You could certainly do that. It's a good idea. I mean, I like the idea. The big challenge you're going to have is actually getting a move, maybe a move up in here that's going to make it worthwhile. And even that's only, 50 ticks, 50 pips. We're going to need a catalyst to drive this thing. And if we only move that much on an ECB day, I'm not sure exactly how this thing's going to move. But you've got a stop out point. It's a relatively inexpensive one. You got all three parts of your trade. You got your entry and your exits. That's all you need. All right, guys, a couple other things, then we'll go ahead and sign off here for today. Continuing jobless claims and initial jobless claims came in. Continuing a little bit bigger than usual, but initial fell. That's key. I mean, that's a bit, really the trend is becoming sort of a stronger labor market than we thought. S&P global manufacturing PMIs and things, I would throw those away. Those are academic numbers. You really don't need to know them. New home sales, though. New home sales are down, and they're down, with 6.627. They're beneath expectations, which are right there at 649, but they are up just a hair, just a smidge from May, and that's seasonal. So remember, May and June, July, those are all buying seasons. That's all part of the North American buying season. And what happens here is typically you get a bump, and then you'll see these fades sort of as we go into the winter. All right, everybody. Well, yeah, I'm at the 5813 on the euro yen short. There's nothing wrong with that. This one right here is pretty good, though. I don't know. You sort of got my attention right there. You're going to have a real tight buy on that Euro Swissy. I'm just worried that it's not going to move. And with crossover trading, if it doesn't move, boy, it's really a lot of trouble. Okay, let's go ahead and throw this. Let's do one more. There's two more things we actually need to look at. Right here, this was sort of an orb. This was an orb trade today. And I showed you this chart earlier, and I'm working on a video right now on how to improve your entry points with the opening range breakout strategy. This is a 15-minute orb, something like this. You can see right here, here's our orb setup. Here would be our initial entry. And if you can work your Fibonacci's correctly, you spike low to a spike high and then the pullback, you can see that golden zone within the orb really sets you up for success. So you got that nice initial strong run, and then you got that deep pullback. But man, when you start talking about an entry point that is superior to your conventional entry, if you're interested in waiting on these orbs and forgetting about the breakout winners that inevitably happen on trend days, this time of year, summertime blues, summertime doldrums, dog days of summer, whatever you want to do, you probably should be improving your entry points on your orb. In any case, in the video, I show you two ways to do that. I'm going to finish shooting it today, and hopefully we'll get it cut out to you next week. Got a lot of demand on the opening range breakout strategy. These ways to tweak it can really help you. All right, everybody, I'm going to go ahead and sign off today. It's been a pretty good trading day. Tomorrow we're going to go with a trading psychology workshop. I'm going to talk a little bit about Friday trading, as I always do. You guys are sick of hearing it, but we're going to talk about the psychology of maybe taking a big loss. I'm going to take any and all questions you guys want to bring on psychology. I'll answer anything you want. I'm an open book. Probably not going to be much BS on my stream. So if you want to ask me, if you got something you've always wanted to ask me, tomorrow's the day. Ask me, and I'm going to talk a little bit about the psychology and what it takes to stick in this market every day for a decade plus, and what it does to you physically, some of the things that it does to you physically, some of the things it does to you mentally. Mentally, this can be a very demanding business. And I've sort of told some stories about the old timers and some folks that I knew that didn't make it. I didn't know them personally, but I worked with guys that worked with these guys. So, when you're a trader, believe it or not, it's an incredibly independent business. We're very independent people. I'm out realistically in the middle of nowhere in Montana. We live in town for right now, but we're moving out to the country. That's going to change. I live in a very low populated area, very, very low. The whole town has 5,000 people in it. All right. It's a very, very remote type of an environment to be trading. A lot of you are in cities, metropolitan areas, and that's great. But still, if you're trading from home, you're in your apartment or you're in wherever you live. I know people that trade on the road. They've got their vans and they just hit the road and they travel and they go surfing and they trade. Anywhere you have an internet connection, you can trade. But it is a lonely endeavor. And what that does to you psychologically, you've got to be able to handle the stress, the cortisol dumps. You've also got to be able to handle the euphoria, the dopamine rushes. You've got to be able to handle all that. And if you can't handle it, you run into trouble. In the case of dopamine, you take crazy risks. In the case of cortisol, you become self-destructive. Those are two things that no traders are really talking about. And there's a few tips that I can sort of pass along, and I'll do that tomorrow, that you can try to help you keep yourself grounded. Now, I'm not going to sit here and tell you that I've got everything figured out, because I have my days and I go through my spells where I'm just like, man, what's going on? It's time to go back to the construction industry. But more times than not, I leave on Friday feeling pretty good. And that's what it takes. It's all about managing your expectations, but also managing your psychology. Tomorrow, we're going to talk a little bit about psychology. We're also going to look at the markets. So we got to look at the markets and do a little bit of a recap on the week. But if you have any questions at all, bring them tomorrow. That's for sure. Let me see, Team Marina. Absolutely. You're absolutely welcome. Lewis, you're welcome. Steve Francis, you're welcome. Thanks, everybody, for joining me. Ralph H., you're welcome. Once again, a big RIP out to the 3. That sort of blew me away because I saw Malcolm Jamal Warner earlier in the week. I did. It didn't even register with me. So you had Ozzy Osbourne, Malcolm Jamal Warner, and now Hulk Hogan. So that's your big 3. That's your 3 in a week. RIP to one and all. Yeah, man, I tell you what, you start feeling old when you see all the 80s icons passing away. That's for sure. That's okay. I still remember all that. I remember watching The Cosby Show. I remember watching Hulk Hogan wrestle. I remember having Ozzy Osbourne CDs. Actually, I had Ozzy Osbourne tapes before there were CDs. So there you go. Let me see. Team Marine, I've been trading from a hotel room this month. It can be a bit lonely and weigh on me psychologically. Yeah, it's hard. It's a hard life. I'll talk more about this psychology tomorrow, But just sort of a quick preview. I mean, I took a gold loss the other week, and I broke down the volumes and exactly what happened. And it was a bigger loss than I wanted to take. No way to sugarcoat it. I sat there and went, wow, that sucked. That was not fun. And I got into the psychology of it. And I sat there and I said, okay, doesn't mean that I'm a bad trader. Doesn't mean that I'm a bad person. Doesn't mean that I'm really unlucky. It's just sort of comes with the territory. But one thing that did happen, and it's just exactly what T. Marina just said, lonely. I started thinking about the amount of money that was lost. And then I started thinking about everybody I really knew or know in life. And I think about, people balancing their checkbooks for a few dollars here and a few dollars there. And I thought about the loss. And it's also with the big gains too, where you go, wow, I just made that much money. And it's a very, very lonely thing, because if you're not around a bunch of traders, you're not around a bunch of people that are doing what you do and think the way that you do about risk, you're on an island. We're going to talk more about that tomorrow. We're going to talk about why being part of a community is important. But at the end of the day, I mean, we're accountable. Our P&L is our sign of success or failure, and it's important that we put that sucker in the green as much as we can. And the only way we can do that is if we're psychologically ready to go. That's the only way. All right. Team Marine, I wonder if I shouldn't have left my career in technology at times. You know what they say? I believe the average millionaire has 6 different revenue streams. So if you want to be a successful, at least a financially viable person or entity or whatever, multiple streams of income are great. So if you go back to work in tech and you've picked up the skills to trade, then you trade on the side, you figure out a way to swing trade, and you go back to tech. It's relatively straightforward. A lot of times, the construction industry and the housing industry is going so big here now in Montana, and the values of the property and the houses are so big now that I've often thought about, I built houses for a long time. I've got the knowledge. I've got the know-how. Physically, I can still do the work. I've thought about, getting a Starlink, an internet connection, and trading from the job site. I've thought about that. Is it possible? Is it possible to do? And I think about it all the time. So I would advise everybody out there that if you got a full-time job or something, you don't have to quit necessarily to go be a trader. You can be a trader and work that job. It is possible. I always say make the markets a supplement and then move from there. And these are some of the things we're going to talk about tomorrow with a little bit of psychology. All right, guys, I'm going to go ahead and sign off for right now. I've run way long, bent your ear way too long. But actually, absolutely have a fantastic session. RIP to those legends. Tough week in a lot of ways. Pretty good trading week, though. Not bad. We've got some video content coming out. Be sure to check us out on X for all the latest on pretty much everything, our trade ideas and updates. Come on over to howtotrade.com if you want to send me a private message. If you need to interact with me directly, send me whatever you want, and I'll get back to you. Any questions you may have. I ask that you do translate them into English, though. That really does help me. That's for sure. But in any case, I'm going to go ahead and sign off. Let me see. What do you got? One last question. Sagoku, what's your opinion on option-based ETFs? Like MSTY for income ETFs. Jury's still out for me, Sengoku. I think about options premiums and the way that options contracts are priced. And then I think about ETFs, and I think about all the maintenance fees and the different ways that the ETFs don't track the underlying asset. I'm not convinced at all that options-based ETFs can even come close to tracking what's actually happening with the options market. I don't know that they can't really track crude oil. So I don't know how they're going to be able to do that. I really am. I'm questioning all of it. I really am. I don't know about that. Absolutely, Tina. I hope my sound was a little bit better today, Tina. I did my best to turn it up. T. Marine, I'm wondering if the real estate market will increase when Powell rolls out. God, man. I mean, we've been waiting for the bubble to pop for so long in real estate. At least I have. I've been waiting 5 years for it to pop. Well, 5 since COVID. I didn't think that the lofty valuations would last too long after COVID. I thought all the 0% loans and all that stuff would go the way of the dodo, but it hasn't. Median price for a home in the United States is $435,000 median. Here in Montana, it's very close, if not above that. I don't know what to say about it. We hired a realtor yesterday, went and talked to her. She's an expert. She's telling us all about it. And it's a scary dynamic out there right now for not homeowners, but home buyers. All right, love the stream. Absolutely. All right, Tina, that's good to hear. I'm glad that the sounds all better. All right, guys, I'm going to get jamming here. I'm going to finish this video up and do some trading here towards the end of the day. You guys have a fantastic session. As always, trade the action well, and we'll talk soon. See you.